Hey guys, so tax strategies for high income earners to help reduce taxes. So, do you make a great income or have extra savings and wonder how to keep more of it instead of paying it all on taxes? So, today I'm going to walk you through 5 key strategies that we use with clients to help them reduce their tax burden and keep more of their hard-earned income. So, this channel is Tax Strategist Bryce. I'm Bryce, where I help my clients minimize their taxes and really help them have a life where they really enjoy it and they feel like they can maintain as much of their hard-earned money as they can. So let's dive in and attack this thing. So number one, understanding your tax bill. So a simple breakdown of the taxable income formula. And before we kind of get into these strategies, I want to start with the basics. So how your tax bill is actually calculated. Now, your taxable income is going to be determined by number one, the money you have coming in. So that can be stuff like wages, if you have a pension, which I know a lot of people don't have a pension anymore, business income, dividends, and investment gains. And you're doing that, you're subtracting deductions. So deductions can be retirement contributions, charitable donations, business expenses, etc. Now, the more taxable income that you have, the higher your tax bracket and the more that you're going to owe. Now, our goal is to find ways to reduce taxable income and increase deductions so you can keep more of your money. So there's really 3 main ways to lower your taxes, right? So in terms of reducing it, number one is going to be lower taxable income. Give me one second. I skipped too far in the slides. Mhm. Back in. um, Cool, cool, cool. So in terms of lowering our taxable income, number one, you can contribute to tax deferred accounts or adjust your business structure. So in terms of that, right, another thing you can do is reducing your dividends, so interest and gains. So using tax efficient investment strategies. Another way that you can do it is by increasing your deductions. So that's taking advantage of available tax breaks like charitable contributions or business write-offs. Now, in each of each of the 5 strategies we talk about are going to fall into one of those 3 categories. So, strategy number one, okay, really maximizing retirement accounts. So, one of the best ways to reduce your taxable income is through retirement accounts. Excuse me. So traditional 401ks, 403bs, or 457 plans, right? Contributions to these lower your taxable income now, but withdrawals are gonna be taxed later. Some other types are gonna be your Roth 401k or your Roth IRA. Now you basically pay taxes now, but withdrawals are tax free in retirement. And if your company is offering a match, make sure to contribute at least enough to get the full match. It's basically free money, so you might as well do it, right? If you're in a high tax bracket now but expect lower taxes later, I would focus on pre-tax retirement contributions. Now, if you expect to earn higher tax in retirement, a Roth account may be a better choice. So next thing is going to be if you've maxed out your workplace retirement plan, the next step may be an IRA. So in terms of traditional IRAs, contributions may be tax deductible if your income is below a certain level. Now, for Roth IRAs, there's no real immediate deduction, but withdrawals are at a tax-free. Withdrawals are tax-free in retirement. Okay, so for high income earners who can't contribute directly to a Roth IRA, a backdoor Roth conversion is also an option available. So, number one, you could be again contributing to a traditional IRA after tax, and then number two, you start converting the funds to a Roth IRA. Now, be aware of the pro rata rule, which can create unexpected tax liability if you have other IRA balances. Always consult your financial advisor before making these conversions. So usually what I'm going to be doing is to help you build a strategy and build a plan, and we're going to be working together with your existing team, whether you have an accountant that does your accounting throughout the year or a financial advisor, right? We all have to. It's basically like a holy trinity is right what we kind of think about, right? Me as a tax strategist, your CPA or your accountant as the one who's doing the monthly accounting and just kind of watching over your numbers each month, and then your financial advisor. Cool. Next thing. So when it comes to taxable investment accounts, okay? Cool. So if you have any additional money to invest, like beyond retirement accounts, I'd be mindful of tax and taxable brokerage accounts. Now, so number one, like really holding investments for at least 1 year. So if you're going to be doing like investments, in a lot of cases, it can be good to kind of hold it for at least 1 year to really qualify for those lower long-term capital gains tax, right? Because short-term capital gains are going to be taxed at your current tax rate. So if you want to kind of reduce a little bit of that, just hold it for at least a year. Next thing is like use tax efficient funds. So exchange traded funds or ETFs and individual stocks provide better tax control than like mutual funds do. Another thing would be to consider some municipal bonds, right? So these oftentimes offer tax-free interest income, and they're ideal for high earners in a lot of cases. Now, tax planning for individuals is like crucial because excessive short-term gains, dividends, and interest income can like push you into a higher tax bracket. That's one thing that I made the mistake a couple of years ago was I had made my consulting business extremely efficient. I just had all this free time, so I started doing like some day trading, and like this is before I was doing like tax strategy like to the highest level, and I just totally like killed it in terms of the day trading. My taxes just like shot up, and at that time I was used to like really be. I'm always really good at like deducting from the business side, but when there's more of like the capital gains kind of income on the personal side, I was not prepared for that, right? Nowadays we don't make that mistake, but back the first time that I made it, it was actually a really big deal. It's like, oh man, how could I have not seen this? And like, that was one of the reasons why I even started doing tax strategy in the first place was because I had gone to my CPA and I was like, hey, there's some things we can do to kind of lower this. CPA is like, no, you should just be glad you live in America. One sign that you're doing well as America is high taxes. And I was like, oh, I was so irritated when a person said that. And I was like, come on, man, there's got to be some stuff we can do. So I started going like researching a lot of this stuff, and then started taking some different like tests and some different exams to go and get like certifications to be really good at this tax strategy stuff. So next thing is going to be your health savings account or your HSA. So a health savings account is one of the most powerful tax advantage accounts available if you have a high deductible health plan or HDHP is what they call them. Now, here's why. Contributions are tax deductible, so they reduce your taxable income now. The growth is also tax free, so no taxes on dividends, interest, or capital gains. And then withdrawals can be used for medical purposes. If they're used for medical purposes, the withdrawals are free. So a huge advantage in retirement, like when that's gonna be like it's a huge like especially if you're retired because your healthcare costs might rise and you're gonna be having like more things that are going on. You might have to go see the doctors more. So being able to have a really good HSA kind of like balance and just growth is really cool. So an HSA again is essentially a healthcare retirement account, and if you can afford to pay medical expense out of pocket today, I would just let your HSA grow for like the future. Next thing is going to be deferred compensation plans. So, if your employer offers a deferred compensation plan, you may be able to push income into the future when your tax rate is going to be a little bit lower. So, how this works is instead of taking like your full salary today, you actually just defer a portion to be paid in a later year. Now, this lowers your current taxable income and reduces your tax bracket. Okay. So, you receive the deferred income in retirement or after a set period, like when you may be in a lower tax bracket. It really kind of depends on like how you live because in a lot of cases, depending on what business you have, it will keep compounding over time. So it's really this is why like everything is so customized to your individual situation because every individual has a slightly different background, lifestyle, and setup, right? Not one size fit all does not work. And that's why a lot of people who don't specialize in taxes really struggle with this. Okay. So, this strategy, again, is best suited for high earners who expect lower income in the future. However, it's important to understand that your plan's rules and some may have like restrictions on like when you can actually access the money. So, I would just be kind of aware of this. Now, guys, taxes do not need to be complicated and making a plan and strategy is generally something that you should get help with an outside person because most people's CPAs are not really equipped to do this, and you're leaving a lot of money on the table, right? It's just one of those things where it's like growing up, I didn't know Uncle Sam, right? I didn't see Uncle Sam when I was at the Thanksgiving dinner. I didn't see him when I was stressing out, having heart palpitations because I didn't know if my business was going to survive. I didn't see Uncle Sam, at my birthday parties growing up. So it's like the only time I see Uncle Sam is when it's time to go and pay some taxes, right? I didn't feel an obligation to him, so I do everything in my power and everything that is legally and ethically correct to lower how much I have to pay in taxes. Now, simple planning now is going to have significant savings for the future, and that's going to compound over time. So if you want some help learning how to reduce your taxes, you want someone to do this for you so that you have a very solid plan. You can work with your existing accountant or your existing financial advisor to help you go and realize this plan. Go ahead and click the link inside the description, either above or below the video, to go and book a call with myself, see if I can help you by reducing your taxes with our tax planning and our tax strategy services. Okay, click the link. I will see you on the call. On the call, we're going to take a look at, like, where are you now, basically how much did you pay last year, how much could you have saved, and what it would look like for us to work together so we can actually go and save you as much as possible. Okay, click on the link. I'll see you in the call, or I will see you inside of the next video. Either way, have a great rest of your day, take it easy, and talk to you soon.